Do you qualify? And if you do, how to claim the dependent care credit in any tax software? Here is an example of W-2 with some dependent care benefits provided by an employer. Very few people receive them, but if you do, it would be listed in box 10 of W-2. I can see in this example that Jane receives $1,500 in dependent care benefits. What does it mean? It often means that you contributed pre-tax dollars to a dependent care flexible account that your employer administered. In order for this amount not to be taxable, you have to fill out Tax Form 2441 informing the IRS how much and for whom you paid the dependent care expenses. Most people don't get any employer benefits, so the box 10 will be empty. In these cases, all the expenses you paid yourself with post-tax dollars. You still have to use the Tax Form 2441 to claim the credit. There is a dollar limit on the amount of your work-related expenses you can use to figure the credit. This limit is $3,000 if you had one qualifying person or $6,000 if you had two or more qualifying people. Even if you paid expenses for only one of the children but not the other, you can claim the full $6,000 if you have more than one child, provided you had enough in expenses. The amount of credit is calculated based on your total qualified expenses and your AGI. Also, this is a non-refundable credit, meaning that you can claim it only if you have tax liability. You can't receive it as a refund if you have zero tax liability. To qualify for the credit, you have to file Tax Form 2441 and meet all these criteria. You have to have a qualifying person, such as a dependent under age 13 at the end of the year, or a spouse that is incapable of care, or another person who was disabled and fulfilled additional criteria. You have to have earned income, such as wages, salary, self-employment income, and it can't be less than the qualified dependent care expenses. You must pay child and dependent care expenses so you or your spouse, if you are filing jointly, can work or look for work. You must be making payments to someone who is not your child under 19 or your dependent. You can have any filing status, including single, head of household, qualifying surviving spouse, and married filing jointly. However, if you are filing married filing separately, there are some additional criteria you have to meet to claim this credit. You need to provide the care provider information with their name, address, and either EIN or Social Security number. If you received any employer-dependent care benefits, such as under the Dependent Care Flexible account, you will need to reduce the dollar amount of expenses allowed for the credit. It is hard to keep track of all these limitations, so instead, you can use the IRS Interactive Tax Assistant to help you determine if you qualify for the credit. Additionally, most tax software asks follow-up questions when you try to claim it to make sure you qualify. Now, to claim the benefits on Tax Form 2441, you have to have a dependent. So you have to add them in the basic information under dependents. In our case, Jane had a baby in 2023, little James. Let's enter his name, birth date, and dummy Social Security number. Then we have to answer a few more dependent qualification questions. Generally, when you support and claim a dependent, you are not filing single, so we will use the filing status wizard to determine Jane's filing status since now she has a dependent child. Based on the answers to these questions, the wizard will tell you which filing status would be best for you. After we listed our dependent and updated our filing status, you can now either search the software for Tax Form 2441, Dependent Care Credit, or go to Deductions/Credits and find it that way. As previously mentioned, to claim the credit, we need to provide the carrier's information, which includes the employee identification number if it is a place, or Social Security number if it is a person. Then you have to select the dependent for whom the care has been used and how much in expenses you have paid in 2023. I will enter the entire $4,000 of expenses that I paid for the care. Because my W-2 with the box 10 is already in the program, the software will adjust for it. If there is more than one provider, you can also list them and how much you paid each. Notice that at this point, the total benefit is showing 0 because we have to answer a few more questions regarding how much of a benefit was available to us from our employer. Once I do that, I can see that the $3,000 of maximum qualified expenses have been reduced by the $1,500 in box 10 of my W-2. That amount is then multiplied by a percentage based on Jane's adjusted gross income. So her total non-refundable credit is $330. First, that credit is calculated on tax form 2441. The amount of our qualified expenses was $1,500, and since Jane's AGI was $40,000, she qualifies for 22% of her expenses to be deductible, resulting in the $330 of credit. That amount is carried to Schedule 3, Line 2, which in turn is carried to Form 1040, Line 20. I can see that the dependent care credit reduces Jane's tax due dollar for dollar. If Jane had no tax due, she would not be receiving this amount as a refund because it is a non-refundable credit. It is only up to your tax liability. Thanks so much for watching.